this is probably the most important moment in Bitcoin's history, or at least in the last 10 years. It's a huge unlock for access to the space. We think it's an incredibly important moment.
11 ETFs or ETPs coming to market on one day is actually historic for the ETF industry. You haven't seen this kind of level of competition on an exposure day one ever.
Hello and welcome to CryptoJournal, your go-to source for all things cryptocurrency. Buckle up for an insightful journey, and don't forget to hit subscribe and the bell icon to stay ahead of the curve. In recent months, the approval and subsequent performance of spot Bitcoin ETFs in the United States have garnered significant attention within the digital asset industry. These investment vehicles have not only represented a monumental shift in Bitcoin dynamics, but also underscored a growing interest among institutional investors in Bitcoin as a viable asset. This script delves into the emergence of spot Bitcoin ETFs, their rapid uptake, market impact, and the projections surrounding Bitcoin's price behavior amidst various market events. Spot Bitcoin ETFs hold 3.3% of current BTC supply. Spot Bitcoin ETFs in the US have quickly gained traction since their approval, currently holding 3.3% of the total BTC supply. Their introduction signifies a notable milestone in institutional Bitcoin investment, with 197 million in net inflows recorded by the end of January. Anticipation and approval. Anticipation for spot Bitcoin ETFs in the US reached a peak throughout 2023, culminating in the approval of 11 Bitcoin ETFs by the US Securities and Exchange Commission, SEC, on January 10th. Despite initial concerns about their impact on market value, these ETFs have proven to be a success, particularly in shifting the prevalence of institutional Bitcoin investment. Market impact and institutional confidence. Bitcoin ETFs reflects growing confidence in Bitcoin as an asset class, especially among institutional investors. With only about 10% of all Bitcoin currently held in ETFs, funds, private and public companies, or governments, the majority remains in the hands of individuals or is lost. Analysts predict a complex price trajectory for Bitcoin in 2024, with factors such as the upcoming block subsidy halving and wider macroeconomic and geopolitical challenges contributing to market volatility. Decentrader warns of a potential sell the news event around the halving, which historically precedes a period of sideways price action before a spike in buying activity. Despite short-term fluctuations, projections suggest Bitcoin could reach new all-time highs by mid to late Q4 of 2024.
A part of this movement, providing more access to Bitcoin.
These ETFs are also competing to convince people that they're a better investment over just buying Bitcoin itself.
For me, I think the biggest negative implication is that the core promise for me of crypto, of Bitcoin, is this idea of self-custodial products where you have ownership of your own money. That is the whole dream of the technology, is people being in control of their own money. And these ETFs, while they are great, they are the creation of a financial instrument.
Trading volume and market performance. Following the approval of spot Bitcoin ETFs, trading volume in the digital asset market has surged, with BlackRock and Fidelity's ETFs closing in on grayscale in terms of daily trading volume. The total trading volume for all active spot Bitcoin ETFs is nearing $27 billion, signaling growing interest and investment in Bitcoin and other digital assets. Bitcoin ETFs in the US marks a significant milestone in the institutional adoption of Bitcoin as an asset class. Despite short-term market fluctuations and regulatory uncertainties, the rapid uptake of these investment vehicles underscores growing confidence and interest among institutional investors. As Bitcoin continues to mature as an asset, its market dynamics are poised to evolve, shaping the broader landscape of digital asset investment.